but you don't have to sell anything in real estate to get the benefit of the cash coming in. So it's just very ideal for that, bridging that gap between when you retire and that time when you are able to start withdrawing from, maybe your pension doesn't come in until later, or maybe you're waiting for Social Security, or you're waiting for access to the 403B, or whatever it is. Welcome to the Teacher Money Show, the podcast dedicated to helping teachers navigate your unique financial challenges and unlock your financial superpowers. I'm your host, Shaun Morgan, a full-time teacher. That's right, I teach every day just like you, and personal financial coach. And I'm here to help every teacher, whether you're a seasoned teacher looking for fresh insights or a new educator navigating your first paycheck, to have a richer wallet, classroom, and life.
The contents of this podcast are informational in nature and are not legal or tax advice, and neither I nor my guests are engaged in the provision of legal, tax, or any other advice. You should not act upon this information without first seeking appropriate advice from an accountant, financial planner, lawyer, or other professional.
Today, it's just me and you again. We're continuing our discussion of investing, and we're shifting now with this new year in the middle of the season to talk about alternate forms of investing besides stocks. We spent a lot of time on stock investing in the first half, and now we're going to talk about other alternatives to investing. I'm going to talk a lot about real estate because real estate is something that I understand, but I'll try to bring in other perspectives as well for the rest of this season as we're talking about investing as our focus on these chats that we have together. Real estate is a very powerful investing tool. But when I say investing in real estate, what do I mean? Well, there are way too many things you can do to invest in real estate to list here, but this is just a quick sample. You can house hack, which is a wide range of things, but generally house hacking is living in one side of a duplex that you own and renting out the other half. I have an episode where I talked to Mason Gomes about this. I'll link to that in the show notes, teachermoneyshow.com/podcast to find the show notes, or you can find it in the description link in your podcast player. But that was a great episode that talks all about this pretty amazing version of real estate investing, owning rentals, owning short-term rentals, which is like an Airbnb, having commercial property, which can be a very wide range, office space, retail space, warehouse space, data centers, all sorts of things can be commercial. Anything that a business operates out of is commercial space. Another really interesting one is something called the live-in flip. Live-in flip is when you buy a house pretty far underneath the value of what it would be fixed up. And then because it's not fixed up, you fix it up while you live in it. And over the course of a couple of years, you fix it up, you make it nice, and then you sell it. And the gains you get from that fixing it up while you live there go in your pocket tax-free. It's pretty cool if you're handy. So that's another way to invest in real estate. And then so much more. But to be clear, investing in real estate is not the same as having a business in real estate. For example, a fix and flip business. A fix and flip business is not investing in real estate because you have to keep buying and selling to generate income. The reason why I put the live and flip in the investing category, by the way, is because it's your personal asset that's growing your personal net worth with your own labor. You're investing your time and energy and labor into just growing that tax-free. It's kind of a quasi-investing, quasi-side hustle thing, but fix and flipping is not investing real estate. It's just using real estate to generate money. It's a great thing if you know how to do real estate to get money if you do it right. It's not great if you do it wrong. I'm going to tell you all about that in a later episode. But it's not investing, nor is buying land. The reason why buying land isn't really real estate investing is because it's much more speculative. It doesn't pay you money to own land. Now, if you're able to buy land and then sell it owner finance to people and then they pay you residual income, maybe, but just owning a piece of land is not really investing in real estate. It's speculating, which is the other thing that it isn't, it's not just like putting money in and then hoping it appreciates. That's more on the gambling, stock picking type of thing. So while these are all potential side businesses and side gambles, they aren't investing in real estate. So I'm not going to talk about the specific kinds of investing in real estate today, but generically, I'm going to be talking about investing. And when we mean investing in real estate, usually we're talking about renting of some kind, because that's how you get long-term growth and cash coming in. So that's what I'm focusing on. So when you think of investing today for what I'm talking about, picture just a regular renting to, a single family home or a duplex to tenants. A lot of these principles will apply to multiple forms of real estate investing. Some of them have to be modified slightly, but I'm just speaking generally on the most popular form of real estate investing, which is being a landlord. So the question is, why invest in real estate? Why not just put your money in the stock market? The stock market is a fantastic tool for growing wealth over time. It really is. The problem is that it only is like how much you put in is how much you're going to be able to get out. Let me explain. You can't do anything to accelerate your money in the stock market. So if you want to accelerate your wealth generation, you're going to need to invest in something else. Now, to put it this way, if I want to invest in a house, the bank will give me money to invest in a house. I have to come up with some of the money, and trying to come up with less is not a good idea. Ask me how I know. You have to come up with an amount of money that they say you need this much money on hand to put money in, and it's skin in the game, but they're going to fund most of that money to get into this property, which is incredible. That if you want to own an $100,000 or $200,000 asset, you don't need to have that much money on hand. But if I wanted to invest in that same bank's stock, that bank will not lend me money to invest in their own stock. So there's something powerful about real estate because it's so tangible that you can leverage, you can use other people's money to get into large value investments. That's what makes it so powerful. I really like real estate investing for middle income earners, because if you can have a good nest egg of money saved up to protect yourself, you are able to invest in something that's going to be able to leverage your income and grow it so much faster than just putting, $100 a month or $200 a month into the stock market. But beyond that, the real estate generally has higher returns than the stock market, which might sound impossible because stock market's like 10% on average. You're like, really? You can get higher returns than that on your real estate? Yes, and the reason for that is partly because of that leverage, right? If I'm only putting in a fraction of that $200,000, say I put in $40,000 for that $200,000, because that's 20% down, right? Well, I'll still get the cash flow coming back from that of a $200,000 asset. And because of that, the amount coming back in compared to how much I put into it can easily be in that 10 to 12% range. In fact, many real estate investors will not invest at lower than that 12% return on investment, which is already higher than the stock market. But beyond that, even, you get so many other benefits because you have that cash flow, which gives you that, base, 10 to 12% return on investment if you're doing it right. Higher, you can get much higher if you are like doing a house hack, for example. You can have super high return on investment. But then you also get appreciation. Real estate appreciates around 3% a year. That 10% in the stock market is usually 10% appreciation, but we're talking about 10 to 12% in the real estate cash flow, and then 3% appreciation. So we're at 15% right there. There are tax benefits to investing in real estate that you don't get investing in stocks. I mean, you can get the tax protected accounts, which is fantastic for stocks, but there's just ways to straight up not pay taxes because of the way the tax structure is around your real estate. So that it's hard to quantify like percentage wise, but that helps too. And then because you have this, mortgage on a $200,000 asset, you are getting mortgage pay down as the tenant pays it, and you're not putting that money in. But at the end of 30 years or 15 years or whatever the note is, you now own outright this $200,000 asset, which has appreciated. So it's probably worth 300,000 or 400,000 or whatever it is over that time period, and you own it outright. So that growth, the gap between how much you owe and how much it's worth, beyond the appreciation itself, is also adding to it. So we're talking easily double the return on investment if you are investing in real estate correctly. So that's why I like real estate as an investment class, just because there's so many more benefits to it than investing in the stock market. It's also a fantastic thing to invest in if you are looking to retire early. Now, retiring early does not mean 35, right? It just means before those magic numbers of 59 and a half, 65, things like that start to come into play. And most teachers are going to retire before that 59 and a half mark, just because of the nature of our pensions. We're going to be able to get out around 55. Some of us will be closer to 60, especially now with higher tiers. But if you are going to be retiring before that 59 and a half mark, you're going to need cash flow coming in to cover the gap in those years between not working anymore and collecting the benefit you need at 59 and a half. So if you have that gap time, you need money either put away in something like 457, which we've talked about, or in something that's going to bring in cash flow. And this real estate brings in cash. You get paid rent every single month. And you can't just use all of that money for yourself. You have to have money set aside for other things, which I'll talk about in a second. But you have cash dependably coming in when you have real estate, which means that you have money to live on. You cannot live on just your stock portfolio without selling your stock portfolio, but you don't have to sell anything in real estate to get the benefit of the cash coming in. So it's just very ideal for that, bridging that gap between when you retire and that time when you are able to start withdrawing from, maybe your pension doesn't come in until later, or maybe you're waiting for Social Security, or you're waiting for access to the 403B or whatever it is. The next thing I really like about real estate is that you are in control of the asset. If you're a control freak like me, the idea of putting money into stock for a company that I have no control over, even though I technically own part of the company, is a little worrisome, just because that company could do something dumb, take a nosedive, and it's gone. Now, of course, putting money into an index fund protects against that in large part, because you're spreading it over a large number of companies. But having something that I'm in control of, that if something goes wrong, I can step in and work on it, or I can step in and try and make it better, is comforting to me. So I like that because I'm in control of the real estate, unlike the stock. Now that we've talked about all the wonderful benefits of investing in real estate, let's talk about some of the drawbacks. First, it is not passive. Unless you have a ton of money to just put into large investment portfolios of real estate. I mean, there are some passive options, but I'm talking about, like, if you want to have good returns, you need to have a lot of money to invest in passive real estate. And if you're investing in passive real estate, a lot of those benefits we said before go out the window. Or you're able to invest with a partner and they do all the work, but you have the money. Like, there are ways to get it, but it's just you get less of the pie that way, and you need to have a lot of money, because real estate's generally expensive in that way. So you need to have time and energy to put into it, unlike stocks, where you can literally just open up an account in 20 minutes, put money in, and never worry about it again, because it's so passive. So that's something to consider, is that you're going to have to put in time. I would estimate that I put in, depending on the month, I put in 10 to 80 hours a month on my real estate. The 80 was when I was having a major problem, which I'll talk about later, and I was going and working on a project actively. So it does take time. If you really don't have time, or you're not willing to put that time in, you might want to reconsider it. But it is um, time that's giving you, a much higher return on investment in the end. It does take a lot more knowledge because, once again, I could tell you how to open up a stock portfolio that would perform as well as pretty much the best of them in about 20 minutes. But I would estimate at least 500 hours of studying and learning to be ready to buy real estate. So it is an additional investment up front of understanding, because what you don't know can hurt you. I spent a lot of time studying, and I still made a pretty massive mistake that, once again, I'll talk about. And it can happen. So you need to make sure that you are aware of the possibility of making a mistake and doing the best you can to learn and to spend that time getting as much knowledge as you can before you just dive in. Diving in, both feet is not the way to do real estate investing without getting the knowledge first. Another thing to keep in mind is, because it's so hands-on, it can be very stressful. If things don't go right, it can cause a ton of stress as you're trying to fix it. Now, if things aren't going right in the stock market, that can also be stressful, unless you have that mentality of, hey, it's just cheap now and I should buy more. So it can be stressful in both ways, but I think it's much more stressful when, the buck stops here for the asset that you're in control of. Because when I am the only one that is making the decisions, and I can't blame a CEO or the economy, it's just like, it's my decision, then the stress is on me to figure it out. So there is that element. And then it's easier to lose money, I think. For stocks, you have that wide range, that index, so the index generally goes up. It's much harder to lose money on stocks when you have an index fund. But one property is kind of like stock picking. That one property can go bad. And if that one property is bad, it can cause a lot of problems. So if you don't choose your property right, if you don't choose the tenants right, it can cost you money, which is why you need to have a pretty large cash reserve on hand. If you are ready to jump in real estate, but you don't have that 3 to 6 months of emergency fund, definitely don't. And that's 3 to 6 months of an emergency fund beyond the money you need to put down into real estate. So make sure that you have that cash on hand, just sitting there ready, just in case something happens, because the last thing you want is to have something go wrong. You can't handle it. There's no liquid cash to overcome the problem, and now you're selling, and you're selling for under the value, and you're going into debt or having a lot of issues because of that. It's really a dangerous position to be in, to not have the money on hand to back it up if something goes wrong. Hopefully it won't, but I'm just pointing out that these are the things to consider when you're getting into real estate. All right, so those are the good sides. It's way more lucrative than stock investing most of the time, but it's way more stressful and likely to lose money and take a lot more effort than stocks. So there's a lot of upside, but there's a lot of potential downside to real estate investing. Now, I will say this: even on the worst investments, real estate is very forgiving over time. So I have an investment, which I'll explain in an episode probably in a month or two, as I'm wrapping up the final itty bitty issues with it, and then I'll be able to lay out the whole thing for you guys. But you know, I'm putting a bunch of money and time into it, and it is very much so negative right now. But if I hold it for 30 years, it will turn out to be a okay investment. It's not going to be a home run, but over 30 years, I will make my money back, and I'll make money on it, and I could sell it and make a nice profit. So it is a long-term game, even more so than stocks are, in the sense that long term, it's gonna go up and it's gonna be good for you, even if you make a bad move. So that's my one caveat against the negative side. So the question is, should you invest in real estate? And my answer is only if you want to. It's really something that, like, if you're listening to this, you're probably interested in investing, and a lot of the investing podcasts will talk about real estate, and it sounds really cool and it's a lot of fun. And if you're like, yes, do it. But if you're like, I don't know, should I? Maybe don't. Okay, because it takes a lot of commitment to do real estate investing. And if you just feel like you're missing out if you don't, that's not enough commitment to participate. So only invest in real estate if you are really committed to learning about it and it's just like fascinating to you. If you just enjoy looking at houses and you're like imagining what you can do with it, and you're like running the numbers and seeing, okay, if I do this or if I do that, it'll produce this. Like if you are really interested in doing that, yes, invest in real estate. But if you're just trying to do investing for retirement, it's probably not the thing for you. So make sure that you are investing for the way that works for you. Being a real estate investor is not required to be a savvy investor. You don't have to be a real estate investor to be an amazing top tier investor. Warren Buffett doesn't invest in real estate. He invests in a real estate company. He owns a realtor agency, but he does not own single family homes or even apartment complexes. He does none of that. He only invests in companies, in stock, and he is one of the richest men in the world. So you don't have to feel like you must do real estate if it doesn't call to you. But if it does, man, it is really powerful. So if you are wanting to do this, go for it. But please mark your calendar for today, whatever the day is that you're listening to this, and start learning today about real estate investing specifically. Put money aside every month in a account with cash for real estate specifically, and wait an entire year before you are willing to make any move. And if you haven't put enough cash away, wait another year. But you need to start learning and putting cash to the side for at least a year from today before you make any move. You're probably going to get a little antsy about 6 months in, and you're like, I think I know enough. I'm ready to go. No, don't do it. Wait a whole year. Get all the learning you can, and then get all the cash you can before you even make that move. If this was interesting to you, then you can reach out. I'm happy to try and answer any questions I have. I am not a real estate guru. I get a lot of real estate advice from other people because I'm still learning. But it is a great asset class in a lot of ways if you are wanting to grow your income and have that solid cash flow for retirement. All right, now it's time for the Cliff Notes. The Cliff Notes today are brought to you by me. If you are wondering what to do for your investing, if you should get into real estate or not, if you should invest in more stocks, or if you are trying to prepare for retirement and you need to know about shifting your portfolio or anything like that, I'm happy to talk to you about how I think through these things in a coaching session. Of course, we'll not give you advice because that's for an advisor, but we can talk through your needs and the way that you can think through that. So if you are interested in that, go to teachyourmoneyshow.com/coaching, and we can meet one-on-one to have a coaching session, whether you want to come on the podcast or we can meet outside of the podcast. I'm happy to help you any way we can. That's teachyourmoneyshow.com/coaching. Now on to the Cliff Notes. The first Cliff Note is to remember that there is so much to know about real estate that you can't just dive in. You need to learn about real estate. Take 500 hours of learning before you decide to do anything. The second Cliff Note is that real estate has a huge earning potential. The earning potential is massive. I made 50% return on investment on a real estate project that I had easily. It was not passive, okay, but it was a very high return on investment that you just cannot see in the stock market. The third thing to keep in mind is that you need to have heavy amounts of cash on hand because real estate can go south. So if you do not have a lot of cash, don't just think, I can just go into real estate, it's going to be fine. Having cash on hand is vital to having a strong real estate portfolio. And the fourth Cliff Note is to remember that you don't have to invest in real estate. It is not required to retire or to be an amazing investor. It's just an extra thing that can accelerate your path if you're interested in it. So please do not invest in real estate just because everyone else is doing it. Not everyone else is doing it. Warren Buffett isn't doing it. So you don't have to invest in real estate if you don't want to. I hope you found this episode about real estate investing helpful. We're going to continue to talk about real estate investing for the rest of the season, as well as other types of investing that are not stock investing. But regardless of how you choose to invest, just remember that as a teacher, you are already rich. Your wallet just needs to catch up.
Are you worried you won't have enough money to retire? Or maybe you just don't know how you're going to get out of all of this debt. Whatever your situation is, I can help you. Go to teachermoneyshow.com/guest and fill out the form there, and you can come on the show for free coaching, or we can meet one-on-one to discuss your needs. I look forward to talking to you.